Hello everyone, and welcome back. In this video, we will walk you through stage 2 of the order-to-cash cycle. In the previous stage, we created sales order number 80 based on pre-negotiated rates defined in the Customer Central application. Now, we'll move forward and demonstrate how to dispatch the materials to the customer. Step 1. Dispatching the materials. We begin by navigating to the Dispatch section. Here, we'll create a new dispatch entry by selecting sales order number 80. All relevant order details, including the items listed in the sales order, are fetched automatically. Note: you may optionally enter transporter or carrier details at this stage. However, these fields are not mandatory. You can proceed without them. Once the order is selected, you'll see the list of all 3 items from the sales order. Since all items are available in stock, we can proceed with dispatch. To initiate the dispatch, click the Edit button. A pop-up will appear where you'll see the pending quantity populated automatically as the dispatch quantity. You can reduce this quantity if performing a partial shipment. However, note that you cannot exceed the pending or available stock quantity. Let's proceed with an example. For item 1, full dispatch. For item 2, we'll dispatch 20 units, partial dispatch. For item 3, we'll dispatch 10 units, partial dispatch. Once the quantities are confirmed, the dispatch document is now generated and can be printed or shared with the customer as a delivery note. This document format can be customized using the inbuilt system configuration tools. Step 2. Generating the tax invoice. Next, we move to the Invoicing section to generate a tax invoice based on the dispatch we just created. To create the invoice, we'll begin by adding a new invoice entry and selecting the same dispatch number we created earlier. In this case, dispatch number 48. It's for customer KCA due tag, referencing sales order number 80, which is automatically populated by the system. You may specify a cost center if required, but most of the fields are pre-filled from the customer master data, so no additional input is needed. If you have a tax reference number, you can enter it at this stage. Otherwise, everything is in place. We'll go ahead and save the invoice. At this stage, the invoice includes all dispatched items, along with their respective quantities and values, which can be reviewed here. While the invoice is now ready for printing or submission to the customer, it will not be reflected in the financial ledger until it is formally posted. To finalize the process, we need to click the Post button. Posting the invoice transfers it to the general ledger, making it an official accounting entry. Once the invoice is posted, the system automatically generates the relevant accounting entries, including revenue, accounts receivable, and any applicable payables. Taxes are also calculated automatically based on the tax percentages configured in the system. The platform supports multiple tax configurations. You can apply a uniform rate across the organization, define item-specific tax rates, or set up other tax structures as needed. With this, the tax invoice has now been successfully generated. Once posted, you'll be able to generate and print the final invoice, or share the pro forma copy with the customer. Step 3. Handling returns via credit note. In real-world scenarios, it's possible that dispatched items may not meet customer expectations due to quality issues, damaged goods, incomplete finishing, or failure to meet specifications. In such cases, the customer may choose to return certain items. Since we've already raised the invoice, we now need to issue a credit note to adjust the value of returned goods. To issue a credit note, go to the General Entry section. To create a new journal entry, first click Add button to create a journal detail for this entry. The system will automatically display the current date as the default. The entry number will be auto-generated upon saving the entry, and the accounting period will be set by the system based on the entry date. Enable subledger transaction by selecting Yes and set the subledger type to Customer. Select Yes for one side entry and fix the debit side, since the revenue account needs to be debited. Finally, choose the revenue account as the debit account to complete the entry. Select an appropriate journal type, such as credit note. Then choose the relevant cost center and enter a reference number, for example, sales order number 80. Add a concise description, like credit note issued against sales order number 80, and finally, save the journal entry details. Next, we add the remaining details. Most fields are auto-filled, so we just need to select the customer, in this case, KCA due tag, and enter the credit note amount, let's say $6,000. Once entered, we simply save the entry. Now the credit note has been created, but to reflect it in the ledger and enable adjustments, such as offsetting it against the original invoice, we need to post the entry. I'll go ahead and post it now, and that's done. Step 4. Receiving customer payment. At this point, the invoice is raised and a credit note has been issued. Now the customer initiates a partial payment. Before recording the payment, let's check the current accounts receivable status. Navigate to Receivables Analytics. Search for customer KCA due tag. The system shows an outstanding balance, for example, $71,875. Now we'll record a payment. Go to Receive Payment. Click Add and select the customer. Choose the bank account where payment is received. Optionally, enter a reference or description. For example, received against outstanding invoice. Then save the receipt details. Now click to Add button and select the invoice to be settled. Enter the payment amount, for example, $30,000. Click Save and process it. Once processed, the system will automatically create the corresponding accounting entry. This includes debiting the selected bank account and crediting the receivable account. Finally, post the transaction to update the ledger. Let's verify the updated status. Go back to Receivables Analytics. Outstanding is now reduced to $41,875 after receiving the payment. To fully settle the invoice, we still need to apply the credit note of $6,000 and any advance payment previously received from the customer. These will be adjusted in the final stage of the order-to-cash cycle, which we'll cover in the next video. To summarize, in Part 1 of the order-to-cash cycle, we demonstrated the process using customer-specific negotiated rates. This included setting up customer-specific pricing, creating a sales order, executing the approval workflow, recording an advance payment. In Part 2, we covered the next phase of the cycle: dispatching the ordered materials, generating a tax invoice, handling product returns through a credit note, recording a partial customer payment. Thank you for watching. In the next video, we'll show you how to apply credit notes and advance payments to fully settle the invoice.